Welcome to our group presentation. We are Group 7 and the video content will cover the financial position of PHAT Corporation and compare the figures with the VN Steel, a competitor from the same industry in three separate years from 2018 to 2020. So this is the agenda of today our presentation. Firstly, we will give you an introduction about the company. Next one, we will analyze the balance sheet and income statement analysis. And next one, we will give you a describe on ratio analysis. And finally, we will conclude the research of Hòa financial health. So before going deeply into the analysis, here the brief background of Hòa Phát. So Hòa Phát Group is a leading industrial manufacturing group in Vietnam. They were established in August 1992 and they are located at Hải Dương province. Hòa Phát, moreover, Hòa Phát initially trade construction and machine and equipment. So this is the Hòa Phát mission, vision, and core value. So Hòa Phát engaged in five main industries: steel item, agriculture, real estate, and home applicants. So as we can see from the chart, this proves that steel manufacturing is the group mainstay because it contributes roughly 80% of its sales and profits. So they are the key people of Hòa Phát successful in the market today. Number one is Chairman of Board Director Mr. Trần Đình Long. Continue Mr. Trần Tuấn Dương is CEO of the company. Ms. Bùi Thị Hải Vân is the Chief of Supervisory Board. And last one is Nguyễn Thị Thảo Nguyên. She is the Deputy CEO of the Hòa Phát company. Now we will move on to the next part, the balance sheet. In this part, we will analyze the three main factors, the total assets, the total liability, and the total equity. So as we can see from the table, it's obviously that have experienced an upward trend during the three separate years. The total assets of Hòa Group surged substantially in 2020, increasingly by about 30,000 billion Vietnam dong over the 2019. The scale of total assets increased sharply after only 3 years. And from the beginning of investment in the constructions of Perfect Dung Wood, Iron and Steel is complex in 2017. Last but not least, due to the impact of COVID-19 outbreak, the total group liabilities doubled during the period, equivalent to over 37,000 to more than 72,000 billion Vietnam dong. Now we move on to the next part, the total asset with the current asset first. By looking closer to the given chart, we can see that the total current assets of PHAT was significantly higher than VN Steel. Moreover, a similar upward trend can be observed in the total current assets of PHAT and VN Steel for 3 years from 2018 to 2020. Despite of the outbreak of COVID-19 in 2020 had trained a lot of economic scenarios as well as reserved the outlook forecast for the domestic manufacturing industry and including the steel industry. However, Hòa Phát company in particular still had a great respectable growth from over 25,000 to nearly 57,000 billion Vietnam dong, with nearly 7 times as much as that of VN Steel. Moreover, the reason why Hòa Phát current assets expand so dramatically in the COVID-19 outbreak, firstly, inventory is excessively high since then they cannot be exported due to the effect of pandemic social distancing strategy. And secondly, the firm had excellent cash flow and high liquidity. Its plentiful cash flows will always be in the company proactive condition in all scenarios. So for the non-current assets during the period, total non-current assets of HFX significantly surpassed the VN still by 5 or 6 times during the period, and the majority of the profits from 2018 to 2020 were invested in fundamental building operation in Jungwon. This is a leading long-term asset to rise fast in the futures. So the net part will be presented by Tim.
HAFA's short-term debt ran up every year and rocketed to over 50 billion VND in 2020. Meanwhile, its rival has experienced slight fluctuation. Besides that, although both companies facing the same external obstacles, such as the economic crisis resulted from the COVID-19 pandemic, the short-term debt in 2020 rose because HAFAC apply a strategy to deal with the pandemic by stabilizing short-term debts, allowing them to reduce losses. According to the figure, Huawei's non-current liability was substantially larger than that of Bean Steel. Specifically, in 2019 was when it borrowed long-term debt the most, almost double from previous year. Then the company decided to cut that amount in 2020. So it can be implied that Huawei must have expanded its reliance on the long-term debt due to the COVID-19. And now we will integrate the income statement. At the very first glance to net revenue, the amount generated in Huawei doubled VN Steel and approximately 3 times higher in 2020. The bigger gaps over year were due to the instant growing of Huawei throughout the 3 years, with faster growth rate opposite with little rise in VN Steel. Next, while its rival spends less than 100 trillion VND, Hapag spent up to 190 trillion VND, considerably more cash outflow. In addition, Hapag increased its expenditure by large amount over 3 years, but been still raised up, then cut a little bit in 2020 as COVID-19 was the cause. Due to bigger production scale, it is explainable why Huawei's manufacturing costs had always been more expensive. Moreover, despite the COVID-19 pandemic, Huawei still managed to increase production and even increase with enormous amount. This proves that the firm was not heavily affected by restriction and difficulty which many of its competitors couldn't handle.
Now we will move to the net income. The given bar chart demonstrates the amount of net income that PHAT and VNC received through its operating activities. In the 2018 and 2019 period, there was a significant drop in both company income due to the COVID-19 impact on the global economy and Vietnam not standing out a bit. But before 2020 end, both companies managed to recover. This point out that they had adapted to the pandemic very well, and after a year of struggle, they went back on the track of generating more income for their business. Earning per share, which is the last component of the income statement, is very important for investors to look at when they decide to invest in a company or not, because whether a company doing good in their business, it will result in higher earning per share or the other way around. PHAT and VN still both fluctuate throughout the period. There was a drop in earning per share for both companies in 2019 as a result of the pandemic causing a stagnant economy globally, but they were capable of rising up again in 2020 and nearly meet the value before decreasing in 2019. This concludes that both PHAT and VN still had good results in their business at the end of 2020. Now I will be in charge of the share of profit or loss in associate. This chart shows the activity that gain profit for both companies. During this period, PHAT number in this category did not change at all. It just began in 2019, which means that the year before, PHAT just focused on generating its profit by its operating activities. But it means that after 2018, there were activities that effectively have PHAT gain profit out of them besides their operating activities. So it means that PHAT had optimized their change in earning profit. In 2020, VN Steel suffered a significant loss of approximately 107 billion in its non-operating activities. Move on to the ratio analysis, which will reflect the company condition in many aspects. Now I will be in charge of the short-term solvency ratio, or known as the liquidity ratio. Give information about the ability of a company to meet its short-term obligation. Current ratio, also known as the working capital ratio, assess a company capacity to fulfill its short-term liabilities or those due within a year. During the 3-year period, PHAT had an increased strain in its number, with the most dramatic uh, increase in 2023, which were over doubling its amount from the year before, and that was enormous because of the pandemic. But PHAT still managed to achieve such a number, demonstrating that they weren't having any difficulties in paying its short-term obligation. But its rival had an opposite trend. VN still was decreasing through the period with a 0.27 times reduction. Quick ratio is used to assess a company capacity to satisfy its more liquid liabilities with the more liquid assets. Like current ratio, both companies had opposite trend in its number. While PHAT had an outstanding gain in 2023, which was increasing almost 4 times in its value compared to the year ago. For its component, while its competitor had a reduction of 11% from the beginning. Cash ratio, which is a ratio used to measure a company capacity to repay short-term debt using cash or near-cash resource. This information is helpful to a character when deciding how much money, if any, to lend to a corporation. PHAT kept up its trend from the last two categories and continued to increase steadily throughout the period, resulting with a gain of 237% in cash ratio at the end of the period compared to the beginning. VN still managed to increase by 0.05 times throughout 3 years. Overall, it indicates that PHAT had wonderful liquidity compared to VN Steel, and it is a good sign for any short-term investor to invest in their organization.
Hello, teacher and everyone. This is An, and I am responsible for the long-term leverage ratio part. And so, let's with me have a look at how long-term solvency of PHAT was between the year 2018 and 2020. So to begin with, let's have a look at the total debt ratio. As you can see from the chart here, an upward trend in the ratio of total debt of both Halifax and BN Steel from 2018 to 2020 implies the greater financial risk. However, as that grade didn't exceed 1, which means that the company had more assets than debt. Thus, the total debt ratio was still under the efficient control of the both companies. Although the beginning of the Soviet periods, as you can see here, witnessed a higher total debt ratio of PHAT compared to that of VN Steel, both ratios became equal 2 years later. Yeah, and next come to debt to equity ratio. PHAT and VN Steel showed their ability to control the debt to equity ratios at a relatively safe limitation, which is just under 1.5. And however, this power, was deductible then because the debt to equity ratio of both companies increased by 0.29 and 0.49 respectively 3 years later. Um, Interestingly, before being equaled at the rate at about 1.22 as Halifax in 2020, and VN still surpassed that of Halifax by roughly 2022 in 2019. Yeah, and next one is the equity multiplier. Halifax has an equity multiplier of roughly 2, which means virtually the portion of assets financed by debt and equity of the company were equal. Meanwhile, with the equity multiplier at 1.72, VN still has assets financed with more equity than debt. And the increase in this ratio of both company indicates a higher portion of debt in the assets. And this tendency has something to do with the debt to equity ratio and total debt ratios, as I mentioned before. And the increase in the amount of debt was consistent with the portion in. So next one is the cash coverage ratios. By and large, neither Hafak or VN Steel can fully meet their financial obligations after paying debt. Even both of them have abundant leftover funds. However, Hafak's cash sources was distinctly superior to that of VN Steel. And in terms of times interest earned ratio, while Hafak's ratio decreased by year, this ratio was considered to be relatively positive at 7.81 by the year 2020. However, that of VN Steel was moderate and it even bottomed at 2.20 in the year 2019, which is less than 2.5. And I believe that this phenomenon indicates a much higher risk of default on its debt, but fortunately, this ratio was soon recovered to 3.52 by the year 2020, implying that the company gradually adapted to the situation and overcome the economic crisis. So now I want to spend some time to give a conclusion for this session. I opine that VN Steel was more sensitive to the COVID-19 compared to Hafak because as the very first three charts that I have showed you before, as the growth of debt related to indexation between 2018 and 2019 of VN Steel was more significant than Hafak. However, it seems to recover and adapt the change better than Hafak because of its slight reduction in the debt ratio by the year 2020, while Hafak kept increasing steadily. And throughout the period, except for the year 2019, Hafak overshadowed VN Steel in terms of either equity or debt. And despite this larger ratio of debt, Hafek's ability to pay debt was by far higher than that of its rival. This can be implied by the times interest earned ratio and cash coverage ratio that I've analyzed before. Um, in conclusion, I believe that in the scenario of COVID-19 pandemic and economic stagnation, caused difficulties to the whole economy in paying various costs as well as interrupted the in-progress investment projects. Consequently, the fact that budget and capital was freezed leads to the growth in the demand for borrowing money, and therefore the amount of debt in most companies will increase, while the ability to pay back obligation decreased, and Hafak and VN Steel was not the exception.
Now I will go to the next part of our ratio analysis, the profitability ratio. Financial measurements called profitability ratios are used by analysts and investors to evaluate a company's ability for generating profits. In general, by effect, ability to generate earnings is somewhat superior to its rival, VN Steel. First, I will talk about the return on equity. According to the graph, PHAT earned a higher return on equity than VN Steel. Ignoring the differences in number, both companies experienced a similar variation, while they had a drop in 2019 before recovering in 2020. PHAT ratios was more sensitive to the impact of external factors like the COVID pandemic. While it had a significant reduction in 2019 of 5.29%, VN Steel only dropped by less than 2% during this time. However, Hafak was able to adapt to the market well when in 2020 it increased to 22.81%, which is 1.64% greater than it was in 2018. Although VN Steel saw a 1% gain, it is not enough to surpass 2018. Now I will talk about the return on assets. Hafak Index had a reduction in 2019, falling from 10.99% to 7.45%, a decrease of more than one-third. Despite an increase of 3% in 2020, this number is still lower than it was in 2018. Its rival VN Steel saw deeper falls as it's more than half in 2019 and only grew to 2.16% in 2020. The large differences show that PHAT had a stronger ability to manage a stable balance sheet and earn from its assets. Now I will talk about the return on average equity. The COVID-19 had a significant impact on 2020, but PHAT showed that the company will be able to grow during this time. Its index decreased from 23.48 to 17.03 times in 2019 before rising to 25.14 times in 2020, making 2020 the years with highest number. Even though VN Steel in 2018 was at its greatest, the company did not have a positive return. Its index decreased by roughly 30% in 2019 and climbed again in 2020 as predicted. However, the increase of 0.92 is not enough to surpass its number in 2018. Now I will talk about the return on average assets. In accordance with the graph, PHAT had a marked drop from 13.06 to 8.36 in 2019 before increasing to 11.53 in 2020. The index in 2018 is still 1.53 greater than it was in 2020. It is not recognized as a positive recovery. Similar variation was seen in VN Steel, whose return on average assets decreased from 3.3 to 1.93 in 2019 and then rose to 2.14 in 2020. According to the aforementioned data, PHAT had a greater average annual asset profitability than VN Steel, which is not unreasonable given that PHAT dominates the Vietnamese steel market. Now I will talk about the gross profit margins. It is evident from the statistics that there are very significant index differences between PHAT and VN Steel, which means that after reducing the cost of goods sold, PHAT had a far greater profit margin than VN Steel. The ratio of PHAT during those 3 years did not change so much. It changed around 3% annually. Whenever compared to PHAT, VN Steel changed about 1% annually. But due to the vast ratio gap between the two companies, in fact, VN Steel saw a reduction about half each year. The last one is the EBITDA margin compared to the previous sections. In this section, the difference in the fluctuations between the two companies can be clearly seen. This number of PHAT dropped from 22.99% to 19.69% in 2019, then unexpectedly shot up to 24.32% in 2020 during the pandemic, making the 2020 the years with the highest value. In contrast to PHAT, VN Steel index in 2018 was the highest, and it was nearly twice as high as in 2020. In 2019, this number cut more than half, and although there has been a rebound to 3.01% in 2020, this number is still far away from 2018. Next, my team member will talk about the efficiency ratio.
So in terms of PHAT, the receivable turnover ratio is slightly increased from 2018 to 2019, but in 2020 there is a dramatic reductions, which is decreasing 20% from 2019, indicating that the customer did not make on-time payment for PHAT. The reason this may become from the financial problem that many businesses have been faced during that period. So for VN Steel, a decrease from 2018 to 2019 and then increase back in 2019 to 2020, which is indicating that 2019 is a hot period, it's a difficult time for many business. Many company they cannot collect the cash on time during this time because due to the pandemic, or maybe because of the unqualified customer, they don't have the ability to make on time payment. And for the day 7 receivable, the highest day 7 receivable for Halifax was in 2020, 26.04 days for Halifax to collect the credit sale. It's increased approximately up to 5 days from 2019, and for VN Steel it was quite fluctuated, an increase of 2 days from 2018 to 2019 and decrease of 1.89 days from 2019 to 2020. So it showed the effect of the COVID-19 pandemic toward the company in steel industry. The excess turnover ratio measures the company's ability to generate income from its assets. In terms of the survey period, Halifax excess turnover ratio did not exist one, indicating that the company was inefficient in generating income, lead to the higher number of access but the lower number of net income. In 2019, both companies experienced a decrease from this ratio. Halifax fell from 0.71 to 0.61, and also VN Steel fell from 1.65 to 1.5. And the COVID-19 pandemic seemed to be the reason for this declining tendency. Both companies cannot sell products, but they have a lot of access, so that it decreased the access turnover ratio for both companies. But in 2020, Halifax escaped from this declining tendency when they recognized an increase from 0.61 to 0.69 in 2020. So for the inventory turnover ratio, the COVID-19 pandemic seemed to have a dramatic impact into Halifax, with a decrease from 3.13 in 2018 to 2.7 in 2019. It's indicating that Halifax is not easy in selling the product. Halifax, they have a large number of inventory, but because of the effect from the pandemic, so that they cannot increase the sale or they cannot manage the sale at annual, and which result in a decreasing tendency. And for the day sale in inventory, because of the low inventory turnover ratio, which leads to the higher number days sale in inventory. As you can see on the graph, from 2018 to 2019, it increased about 20 days for Halifax to sell the inventory. And comparatively for VN Steel in 2019, they just take around 15 days for VN Steel to turn over the inventory, which indicating that VN Steel is better in terms of managing inventory and sale. And last one is the PA ratio. The PA ratio for VN Steel is absolutely greater than Halifax, but Halifax they experience a upward tendency, increasing tendency by increasing 1 to 2 times of this price earning ratio per year. This also we can figure out that the investor now they anticipate stronger role from the company. They believe that the company will grow bigger and develop more in the near future, so that they decided to accept a bigger payout for the current share price and optimistic about the company prospect.
And finally, to wrap up our content, on the charts above, on this slide, it is clear to see that Wi-Fi predominated in most areas throughout the 3-year period from 2018 to 2020. The steel production activities, Wi-Fi operated at bigger scale, and it also statistically stay at a more favorable position. According to many sources, Vietnam demonstrated huge potential in the steel market as there has been a rapid increase in production capacity in recent years. And after evaluating and comparing, we can be confirmed that among the Vietnamese steel company, Hòa Phát Group is probably one of the leading contributors to this achievement. This is the end of Group 7 presentation. Thank you for listening.